Hey everyone, welcome back. If you are into options trading or even just dabbling, there is a pretty exciting update on Robinhood you will want to know about. Robinhood's new desktop platform, Robinhood Legend, has rolled out a feature that might seriously improve how you gauge risks and reward on options. The ability to see the expected move and implied volatility right on the options chain and as per the expiration. Today, I'm gonna show you exactly how that works and why it matters using real examples. So let's get into it. Okay, before we start, right, if you are new to the Robinhood Legend platform itself, then I would highly recommend that you watch this video as well because that's gonna give you the complete basic overview of it and it will walk you through the basics of Robinhood Legend platform. Okay, now let's get into today's topic, right? What is this new feature? On Robinhood Legend, when you are looking at the options chain, you can now enable something called display IV and expected move setting, right? You just click on the three dots menu in the top right above the option chain and that check display IV and expected move, right? This will show you two numbers next to each expiration. One is a percentage, that's implied volatility for that expiration, and the other is a number with a plus or minus, right, which is the expected move. Now let's walk through a real example with DocuSign, right? Take a simple DOCU. Imagine you are planning to sell a cash secured put for the September 5th expiration. What you will notice immediately is that the IV for that week is super high. It may be more than 100%, right? Compared to the 82% the next week and just 40 to 50% for the further dates. Now, why does it spike, right? It's because DocuSign has earnings next week and that market expects a big move, right? And that expected move value gives you a dollar estimate of how much the stock could swing in either directions by the expiration. So all this, right? Now, how this can help you? Well, if you had only looked at the older features, right, you might miss the fact that the market's pricing in a way more risk. Maybe an event is about to hit, right, like earnings. This heads up can help you decide whether you really want to avoid the risk or maybe even take advantage of that, right? So to see the difference about what we saw before, right, in the DocuSign, let's take an example of Apple. So Apple just reported earnings and has no big news coming in coming weeks, right? So if you look at the IV and expected moves for the upcoming expiration, everything stays pretty flat. IVs of 25 to 26% week after week, right? And the expected move is much lower and it's pretty much steady, right? So no surprises there. Options trader call this a quiet period, right? Typically meaning there are no volatile events that's getting priced into the option price. Now let's throw the NVIDIA as well, right? Just to make things more in comparison to someone which has a earnings next week, right? So this is stock known for its big moves, right, around earnings or AI announcements that might show a pop in IV and higher expected move ahead of those big events, right? It's very similar to DocuSign. After a catalyst, watch how that IV drops, right? NVIDIA had their earnings a couple of weeks back and now it has dropped down, right? So by comparing these stocks, you can get a big picture of which earnings you should be playing for the coming weeks, right? Now, another thing to note, right? Let's compare the open interest, right? Because that's also a pretty good indicator for your options trading. So, open interest tells you how many option contracts are actively in play for a given strike and expiration. So, stocks like Apple and Nvidia usually have a huge open interest, often in the tens of thousands per strike, meaning lot of liquidity, easier entries and exit. Now, DocuSign, on the other hand, tends to have much less open interest, right? So traders might feel slower or with a wider spreads. This is something to check alongside IV and expected move for a complete picture of the risk, right? So all these, right? So why does it matter? So the new Robinhood feature puts all this intel front and center on your screen, making it faster and clear to assess potential trades at a glance, right? Whether you are selling puts for income or buying calls ahead of an event, knowing the IV expected move and even checking open interest makes you a much more informed trader, right? Not just gambling around the options. Now, before you go, right, remember high IV means higher option premiums, but you have to be cautious. There is a reason markets expected a move, and that's market is kind of expecting some move around that, right? So these Robinhood Legend tool are going to help you assess that risk and make a more informed decision. Let me know guys in the comment if you have question and do you like this feature and how this is gonna help you. If you have any questions around this one or anything around options, do let me know. I do read all of the comments and I will reply back to you. And guys, if you have found this breakdown helpful, hit like and subscribe for more tips like that. Happy trading, and I'll see you in my next video.